Correct, sir. Over to you.
Right. Thank you for, first of all, Santosh, for I'll not give you thank you for inviting me first. I'll thank you for taking this particular initiative for creating of this learning group and starting discussion on various subject. So thanks for that first, and secondly, thank you for inviting me now and for this program which you are organizing. Thank you very much, Sagar, for for your introductory remark and introduction. Thanks a lot for that. And thanks all the participants who are here, specifically I can see a lot of known faces, known names rather, no faces, known names, and including from Mumbai. So thanks everyone for joining this. Now, when I'll of course talk about annual return and some of the practices which I personally feel we should do it while filing the annual return, and maybe we may not be doing it because of some of the understanding differences, maybe some of the reasons of our own interpretation, the way we interpret the law. So I'll try to cover up things, and all this, whatever I'm talking about, is purely my own learning, and from last 7-8 years when we have been doing some of the largest due diligences which I've done for various companies. So there I got few very interesting experiences on annual return filing. So I'll share those experiences whenever it will come. And a small disclaimer that whatever I'm going to present is absolutely personal in nature and nothing to do with the organization to which I belong. Right. So with this, let me start. I think you have to allow me to share the screen.
Right. Your co-host. Your co-host now.
Right. So I can see now. Okay. Now, can you see the screen sharing? The right. Thank you, Santosh, for confirming this. Right. So, okay. So we'll talk about a few things. Of course, I know the presentation is very large, so we will not be able to complete in the given time, but whatever we will be able to complete, at least first two part I would like to complete. The rest 3 and 4. 3 is more about the process part and all those things, how to do the certification and all those things. So that, of course, I'll share this so you can very well go through that particular processes. If time permits, we will take that. But first two, that is my wish list, but we should do it. And then while debating and discussing, one thing I would like to clarify that whatever the technical issues which we face while filing and all, so I'm not the technical expert of MCA system, and I don't have any control over the MCA softwares, and also I will not be able to solve your technical problem, because for that I am and you are sailing in the same boat. So I don't have solutions for that. I don't have anything whereby I can do something extra and my return will go and your return will not go. It will not happen. So I leave it to that part to the regulator only. So that of course I will not be able to solve anything. So let me clarify that. I'll talk more practical and more legal portion. Technicalities, whatever we face, I am not part of that. Okay, so we'll talk about this annual return. These are some of the I'll always say these are the ritual slides when we start some topic, and to talk about this what exactly annual return, and also I think somebody has to keep on mute. There is a lot of disturbance.
I would request all the participants to please mute themselves. Sagar, if you are seeing any highlighted person apart from the speaker, you can mute him.
Yeah, I'm doing that.
Perfect. No. Okay.
All right. So of course we are all aware of all these provisions that we need to file annual return and then file it within a period of 60 days from the date of AGM and all. So everything is very well aware. So I'm not wasting much of the time on these slides. Okay. So what we'll talk about, we'll talk about MGT 7 and 7A. 7A is nothing much. If we have the clarity on 7, then 7A is automatically covered. So specifically, there is no need to talk about that. We'll talk about MGT 8 related portion, and of course, this MGT 9 is omitted, so there is no need to discuss on that front. It's one of the most, I would say, one of the most. I would say I always felt very uncomfortable while preparing this MGT 9 kind of form. So fortunately, it's now got deleted from the omitted from the legislation book. So thankfully, we are not required to prepare any more this particular document. And of course, MGT 8 is applicable to few of the companies, selected companies, that is the listed companies and companies having paid up share capital of more than 10 crore or having turnover of more than 50 crore or more. So then only this will become applicable. Otherwise, there is no need to have MGT 8. These are the signing and certification requirement that if you're a small company, one-person company, director or company secretary, listed company or prescribed class of company, director and the company secretary and PCS, and for other companies, director and company secretary or director and PCS. So this is the signing or certification requirement which we have as far as annual return is concerned. So these are the various content of annual return, which will go one by one. Some of them is require, discussion. Some of them are, of course, I'm not going to touch how to fill the SIN and press the button and all those things. Of course, we are not going to discuss, but few of the interesting elements of annual return, which we will be having, discussions and all. So these are the common, registration, other details whereby you can very well put some of the basic information about the company. Here, there is one specific issue which we generally face, specifically for those companies which are private company but subsidiary of public company. So what type we should select, whether we should select public company, whether we should select private company, or because by default, if you look at the system will always, the form will always, the moment you will prefill your SIN, the system will always show you as a private company limited by share only, means whatever data is appearing in the MMC sites. The moment you will, put the, but you are a subsidiary of a public company, so you will also become a public company. So can I first of all, can I change this field? Type field is whether it is a logged field or it is a field which I can change. So of course you can change it. You can very well select their public company and provide a clarificatory letter to the which can be attached as an optional attachment, whereby you can very well provide. So either you are selecting private company, that is also not a problem, or you are selecting that is as a public company, that is also not a problem. But whatever you do, my suggestion for this particular exercise, that we should put a clarificatory letter, because if you select the private company, then legally you are not a private company. So you are clarifying that my SIN is reflecting PTC and all those things, but I am not a private company. Therefore, I am putting an attachment that I am a subsidiary of a public company. So I am deemed to be a public company. Or if I am selecting the public company, but my again name and SIN and everything is not suggesting my me as a public company. So again, I can put an attachment, and whereby I can clarify why I have selected public company. So this particular part may be taken care of. It would have been a very good thing where the a new category in the annual return could have been selected, that subsidiary of public, something like that. So for private companies, so this problem could have been sorted out. But however, presently it is like this, so we have to be go like that only. Now come to the principal business activities. So we have a instruction kit where a lot of codings are given. So we need to follow that code. For that A to U code, which are given in the help kit. So that activity code we need to select. And interestingly, now here there is a confusion because whenever we talk about annual return and the principal business activity, so which business activity actually we need to select? The company in which you are for which you are formed, as per your object clause or as per your revenue from operations or any other thing which you need to select. What is to be selected in this case? for annual return purpose. Here also one of the important thing which is to be noted, that if suppose you formed a company for the purpose of, say for example, you want to have you formed a company for, say, car manufacturing, right? So your object is to manufacturing of the car and selling of those cars in the market and all those things. That is your object. But the moment you will form the company, it will not happen that you immediately started selling the car. You will raise the funds, you will you will get the land, construct the company, then the commissioning of the factory will be there, and then only the manufacturing processes and everything it takes time. Maybe a couple of years will take to entire commissioning of the factory, and the production will start, and finally the car will come out of the factory. So during first year and the second year, now what has happened that when you procured that land for the manufacturing of your factory, so in that particular land you started some activities for plantation, and then because of those plantation activity, you found that in that plantation activity in my factory premises, I'm getting very good vegetables and the fruits and any other things which I can sell in the market to the retail stores. So it started selling those those vegetables, fruits in the market to the retail stores. Now you see your company in the first year annual return, your company is formed for the purpose of car manufacturing, but your revenue from operation is from that plantation activities. So which code is to be selected, whether plantation or whether the car manufacturing, or both, or none of them? So what we should do? Here my submission with regard to this particular activity, that in this case we should always select the because it is linked to your turnover data. So definitely it should be your activities for which is selected which is generating the revenue for you during the year. You need to select that particular activity code. So not for which the company is formed. However, the important point to be noted that if we are habitual of filing the annual return in the month of November, so in the month of November, what will happen that you will be giving the information of 31st of March, which is as old as 8 months in information. And suppose and the opening balance is of I request all the participants, please be on mute. It is creating some kind of trouble actually.
I would request participants to please mute themselves.
Right. So
1 second. Yes, sir. Please.
Yeah. So what will happen in this case, that the example which I've given, now in this case the opening information will be as old as 20 months old, right? 20 months, and closing information is somewhere around 8 months old if we are filing in the month of November, and we start preparing this document in the month of November, and suddenly you come to know in the month of November, oh my God, this is the activity for which the company is formed, but there is no object for the the activity which has generated the revenue for the company, and companies actually did that particular business. So to rectify those kind of things will take it will become impossible to rectify those kind of stuff. So it is always better that have a close eye on the activities of the company which the company is doing. If you are serving to a bigger company, so you divide the companies into 3 categories, ABC categories. If you are serving to A categories, which is bigger companies, and also have a monthly monitoring on those activities what the company is doing. So if at all you find that the company has started doing some other activity which for which there is nothing is mentioned in object clause, so of course it's a wrong, but at least the damages can be controlled during the year itself, and it's for a very small period of time. It will become very impossible to control your damages when it is you come to know at the time of filing and also. So you need to be very, very clear on this. And that is the reason I say always that annual return, for the purpose of filing, it's an annual document, but for the purpose of preparation, it's a concurrent document. You have to have a close eye on each and every activities which is going to affect your filing. So this is an annual exercise. So annual exercise in terms of filing only, not in terms of preparation. It has to be a concurrent exercise. Specifically, some of the item like the business activities, and when you will certify MGT 8, so your deposit things should you can very well control those damages with time. Otherwise there will be a problem with the doctrine of ultra virus. You are doing something which is not there in your memorandum and all. So you have to have a close eye on this. Come to next particulars of holding subsidiaries, JV and associate. Now this is very interesting actually. So if you'll ask anyone that which document do you rely, means when suppose I'm a company and I'm saying to my practicing company secretary, okay, these are my subsidiary companies. Now practicing company is verifying. So which document he is relying? My investment schedule. So my investment schedule may give correct information, may not give the correct information. Why so? Because my investment because in case of holding, in case of subsidiary, I need to look at the voting power, not the 50% or more than 50% holding of capital of any other company. That is not the criteria. Criteria is the voting power. So whatever shares I am holding, so I need to actually check whether on those shares whether I am having a voting rights or not. If I don't have the voting rights, naturally, if whether you are holding more than 50% of the shares, still that company will not become your subsidiary because you don't have the voting power. So that you need to be very, very clear on that. Secondly, what will happen that in case of companies for which you are holding the preference shares, so that will also an important element to decide the subsidiary relationship. Because what happens in case of preference shares, if the dividend is not paid for a period of if the dividend is not paid for a period of more than 2 years, then that preference shares gets the voting rights. So what may happen, suppose your company's capital is say 300 rupees, right? Assuming for a moment, and out of 300, 100 is equity and 200 is preference. Now you are holding preference capital. You have invested in a preference capital. So you are holding 200 capital for preference, and there is some other company which is holding 100 shares for equity. So that other company, what will happen? That other company is the holding company as far as equity is concerned. Now, what has happened that that company has not paid the dividend for a period of 2 years on that preference shares. Now you are holding preference shares. Now what has happened? Technically, that company has ceased to be the holding company, and you have become the holding company. So whether you have considered you have to consider that company as your subsidiary in annual return. Not only that, whether the consolidation done, not done, and all those aspects you need to take care of, whatever the applicable to the subsidiary companies. So that preference shares, whenever you see the preference shares element, you will be very, very clear that which is sometime even I had the experiences in past, even the companies are not aware that I have become the holding company. Because they've never envisaged this particular problem where the voting rights is accrued on the preference shares, and which is more than the equity shares, and the companies are holding more capital in terms of voting rights than the equity. So that scenario may happen. So again, you need to take care of those particular points. May I request Ms. Damini to please be on mute, please?
Yes,
Damini
sir.
Srivastav. Thank you.
Yes, and this is rightly mentioned, Anshul sir. Generally, at the time of startup companies, these kind of things needs to be taken care.
Absolutely. So this is one important point. Now, second point, what happened that in case because the holding and subsidiary, if you look at the definition of subsidiary, it does not only talk about the voting power, it also talk about the control, the composition of the board of directors. And when you say what is the controlling, what is the what is the meaning of that control, the composition, where you get the rights to appoint. It's a rights, whether actual exercise of the rights is there or not, it is immaterial, but you have a right to appoint or remove the majority of the directors of the company. So that means you are controlling the composition of the board, and that company becomes your subsidiary company. Now, how you will verify this? At least in case of voting power, you are holding some shares which is lying in your investments, notes to accounts. But what about these kind of shares with these kind of subsidiaries where you are controlling the composition and you are not holding any single capital? So hypothetical that you are holding the composition but you are not having capital, it's a hypothetical situation, but still or you may not be holding more than 50% of the capital, but still you are holding the having the control over the composition of the board. So in that case again,
Sorry to
Mr. Nikhat,
I would request participants to please mute. Kindly take care of that thing. Do not disturb the session again and again.
No, I have one question actually.
Okay. Okay. Yes, please.
Actually, is this possible to control the composition without any capital, share capital in that company?
No. I said that looks little hypothetical, but if it is without capital, but you may be holding 10% capital and having the control. That is possible. That is very well possible. It's not necessary that you may have the more than 50% of the capital only. So so the precise point is that only that you need to check.
It is possible in the situation of
yes, Mr. Rupesh, you're saying something. You're on mute.
Rupesh sir, can you please unmute yourself and please hello, Rupesh sir?
Anyway, so so my precise point is that in how many cases actually we check this particular aspect also. In fact, I had a very interesting experience a few years back when we did a due diligence. We found a very interesting situation. When we checked the documents of the other company, the target company, we found that the target company was holding more than 50% capital of another company, with 50% capital with voting power of another company, and that another company was holding right to appoint majority of the director of this company. Now, which one is holding, which one is subsidiary? Both are holding of each other and both are subsidiary of each other, falling into different definition criteria. So in fact, that was our condition precedent in the closing document, that you have to clear this kind of a structure where the other party has to leave the right before we acquire that company, because we don't want to get into this kind of trouble. It's very difficult to decide that which is the holding and which is the subsidiary in such kind of scenario, and which is so you need to take a confirmation from the management side that there is nothing, no such kind of agreement is in existence where which is giving right to appoint majority of the directors and all. So that at least from your point of view and from audit point of view, you should have that kind of confirmation with the companies. And of course, whatever the percentage of shares held and all those things are there. And in case of this percentage of share held, what may happen that there is a possibility that you have two holding companies. How it is possible? So A Limited is a company, its subsidiary is B Limited, and B Limited subsidiary is C Limited. Now you are preparing the annual return for C Limited. Now which one is your holding? Your holding company is B also, and your holding company is C also. Both the companies are your holding companies. Now the moment you will try to fill the figures, it will create some kind of error message that because the capital because both the A Limited technically is not directly holding any capital in your company, it is holding indirectly through B. So in which while giving the data of holding company, you need to give the percentage of share held. So you'll give say X percentage in against the name of B, and then again you will try to fill the same percentages against the name of A. So the system may give you the error message because it will be crossing more than 100%. So so in that case also you can put the A limited as 0%, limited as whatever the percentage B limited is holding directly. And at the end, while in a clarificatory letter, you can give this kind of
Anshul sir,
clarification.
there is still some disturbance. Can the admin not mute the other participants?
Yes, ma'am, I am already doing it. And actually, this is not only one participant, many of them are creating this issue. I would request 1 second, just I will try technically to mute all the participants. Anshul sir, meanwhile, you can proceed.
Okay. So so what will happen in those kind of scenario? You need to give a clarificatory letter where you will clarify that A limited is why you are showing as 0 and all those things, though it is your holding company. So you have to tell that it is the indirectly holding, something like that. So whatever that English, you can very well write it. But my point is that you need to clarify those kind of situations while filing this holding subsidiary JV and associate data. Right, so this is about holding company, subsidiary companies, and now come to the share capital, debenture, and other securities. So, of
Sir,
course,
I have a question. Will you take it?
Yeah, please.
Yeah, the question is that deciding about control. What are the situation when there are negative controls for management and policy decisions? So, what is your recommendation in such situation?
Right, sir. So as far as Companies Act is concerned, the annual return, you need to be, first of all, focus on the definition of whatever is given in the Companies Act. You should not go beyond those things. So Companies Act talks about two things. Number one, rather three things. Number one, if you are holding more than 50% of the voting power of another company, then you are the holding, and there are other companies your subsidiaries. Second, if you are holding if you are having the control over the composition of the directors of other company, then you are the holding, and that other company is subsidiary. And third one is subsidiaries, your subsidiary. Barring these three criteria, Companies Act doesn't talk anything else. So if you are fitting in any of the clauses, that other company will become your subsidiary. Now, as far as your shareholder agreements and all those things are concerned, you need to see whether you are fitting in these three criteria or not. If yes, then the other company will become your subsidiary. Now I'm talking about Companies Act. Now, when you will look at the definition from the perspective of Indian accounting standards, so there may be a different criteria, because Ind AS talks about more about the control. Right. In Ind AS, there is a possibility that you are holding more than 51% capital, but still you don't have the control. That there is a possibility the other party may also have the control. So that situation we are not talking about here, because that is from the accounting perspective. But as far as disclosure in annual return is concerned, you have to stick on that 287 definition only. Now, coming to share capital, debentures, and other securities. So now the form is altered, and now you have to give the bifurcation of your capital into demat and physical. Earlier, it was only total capital you need to give, but now you have to give from this year onwards, the new form which is notified. You need to give the demat and physical capital separately for this. And I hope specifically for public companies, which are not government companies, which are not Nidhi companies, and which is not wholly owned subsidiaries, they cannot raise the capital in physical form as per Rule 9A of Company Share Capital in Companies Prospectus and Allotment Rules. So that rule is already there, which talks about the entire mechanism of demat and physical. And of course, in the Companies Act, in last amendment, the government got the power to even earlier this section 29 talks about the public company. Now the public word is deleted from the law, so now it says company. So government may come at any point of time, even the dematerialization, compulsory dematerialization for even private companies also. We never know when this provision will come, but government has the suitable powers available in the law to prescribe for such kind of companies. So But in the annual return, what they have done, they have clearly now this year onwards, they have bifurcated about the demat and physical capital as on 31st of March you need to give, and rest of the things that you need to give the number of this preference capital also, then unclassified capital if you have anything. Now here one very interesting scenario which we experienced,
पॉइंट यहाँ से कितनी दूर है?
Specifically with regard to the authorized capital, we found a very interesting scenario. Suppose my company A Limited is having preference capital, and preference capital, my memorandum is like this. Say my capital is total authorized capital is 300, right? And the 200 is my preference capital and 100 is my equity, right? And this is what is written in my capital clause. Now, when I issued the preference capital, so I have issued preference capital in 3 different type of preference capital I've issued. Say 2% capital, 6% capital, and 9% capital. Whereas my memorandum of association simply says preference capital. It does not say 2, 3, 9, 6. It simply says preference capital, right? And out of that preference, I have issued say 2%, 6%, and 9%. And I've issued that 200 capital, preference capital, out of which 200, 150 I have issued, 150 I have issued, means 2%, 6%, and 9%, and 50 is yet to be issued. Now, while filling the annual return, how to divide authorized capital? Whether because my authorized capital is combined 200, but when I will do issued, paid up, and subscribe, paid up, and issued, subscribe, and paid up, it will be into 2%, 6%, and 9%, which I mentioned. So how to divide? That is the biggest challenge we face, specifically with regard to the companies which are having multiple classes of preference shares. And moreover, what happened while submitting the annual return, if I don't have the multiple class also, assuming I don't have the multiple class, still there is a problem. Why? So I have a single class. So if I'm parking my entire capital in that single class, tomorrow anybody can take a view that you yourself have said that my entire 200 capital is belonging to 2% capital. Then how can you issue now 6% capital out of that? So you have to either alter or you need to do something with that. So there may be a question. So now we have asked also, we have requested ministry to do something with regard to the authorized capital of preference shares, whereby you can create a single field for the authorized capital, and then issued, subscribed, and paid up can be created, multiple field. But unfortunately, that is not happened yet. So so to overcome this kind of a problem, what we have done, in fact, what I used to do, that I write my entire preference capital, consolidated preference capital of authorized, issued, paid up, and subscribed in a one column only. And in my clarificatory letter, I clarify the situation that I have written my entire capital as one only, but I am now clarifying that it is divided into 3 different classes: 2%, 6%, and 9%. And I give the reason also why it is so, because I cannot classify my authorized capital into different classes. That is the biggest challenge we face, specifically wherever the company issued the preference capital. So this kind of scenario may also come. So you can give very well clarify with by way of a clarificatory letter. Okay, then comes to the breakup of paid up share capital. Beginning, what was the beginning capital, increase, decrease for equity preference? You need to give the premium amount. You need to check increase, decrease in premium during the year. If you've done any kind of stock split and consolidation during the last 1 year, then you need to give that detail. What was the before consolidation? What was the before or split? What is after the consolidation split? You need to give the entire detail of this. If at all you have transfers, any shares from the closure of the last financial year, you need to provide the data of those transfers. You can attach a separate sheet, or you can provide the data on the MCA portal also. I think MCA has an Excel sheet available whereby you can provide the data. One of the things which is now omitted, that you need to provide the data for the indebtedness of the company, including debentures. So whereby the debentures are there, then secured loans, unsecured loans, both excluding deposit and the deposit. So now you can see 2, 3, and 4, which is secured loans excluding deposit, unsecured loan excluding deposit, and deposit. These three segments are now omitted from in the new format because of the amendment in section 92 actually. So section 92 got amended, and because this particular details is no longer required, so therefore it is now omitted from the format itself. But you need to give the data of debenture that is continuing, and it is to be classified into 3 parts. One is non-convertible debentures, one is partly convertible debenture, and one is fully convertible debentures. Now here also there are sometimes question comes that I have an optionally convertible debentures, right? So that optionally convertible debentures, where it should be parked. So whether it is NCD, whether it is PCD, or whether it is FCD, or the fourth option, I need not to disclose only because it's neither FCD, neither PCD, or nor NCD. Of course, it is not NCD. There is no question, no doubt on that. If there is a convertibility, then of course it cannot be NCD. Now, whether it is PCD or FCD, we have to take a judgment. How to take that judgment? You need to see the terms of conversion. If suppose my debenture is 100, and I say that whenever the redemption will happen, the 50% will be redeemed and 50% will be converted into shares. So it is of course a partly convertible debentures, and if whenever the conversion will happen, it will be converted 100% into shares, then it will become fully convertible debentures.
I would request participating once again. Yes.
Okay, so yeah, so you need to go with the terms of the issue of that debenture. In the terms of issue, you will find the conversion clause, and that in that conversion clause, you need to check whether it is PCDs or FCDs. You must have, while issuing of the debentures, you must have filed MGT 14 form, in which this particular data in the explanatory statement, it is mandatory to give the convertibility, how it will be done. So you can check from there. And moreover, the third document is also there, that what is the, as per Schedule 3 of the Companies Act, whenever you have issued any kind of debentures. So in your financial statement, a disclosure should come about the brief terms of that debenture. So in that terms, whatever you have disclosed, so everything should be aligned. Means in your annual return, whatever you are disclosing, make sure the same disclosure has gone in AOC 4. Means I mean to say that financial statement, the same thing is written in your MGT 14. So everything should be aligned. If you find any kind of discrepancies, then you have to take immediately rectification steps to align the things, because it should not happen that 1 year you are giving X disclosure, another year you are giving the Y disclosure without taking any action. If you have done some kind of restructuring whereby you have changed the terms, it's fine. But without doing all those exercises, simply parking 1 year in PCD and another year in FCD, it's not a right thing to do. Right, so just this is also to be taken care of. And then if you have any other kind of securities, then you need to provide the data of that. Okay, now coming to the very interesting aspect of interesting definitions, rather interesting disclosures. One is about the net worth and one is about the turnover. So what is net worth, what is turnover? If you look at the definition of turnover, prior to Companies Amendment Act 2017, a very interesting definition was given with regard to the turnover. So it used to say that the amount realized from the sale, supply, or distribution of goods. So that means if I have not realized any amount, it is not forming part of my turnover. So that is a very difficult definition was given in the Companies Act initially, as far as interpretation part is concerned. So this problem was reported to the ministry, that the definition of turnover is very vague as far as Act is concerned. So ministry, based on the recommendation of the Company Law Committee, that CLC they formed in 2016, they changed the definition. and now it is aligned with the accounting standards also. It says that the gross amount. So the first difficulty which is removed from the definition of turnover is the gross amount. So earlier there was a confusion whether it is to be net of the taxes or whether it is gross amount which we need to give. So now it is absolute clear that you need to give the gross amount. So this amount will not be net of taxes. It will be gross amount you need to consider of the revenue recognized in profit and loss account from sales, supply, distribution of goods, or on account of services rendered, or by both by a company during a financial year. Absolute clarity as far as definition of turnover is concerned. So now the question comes whether my interest income is my turnover or not. So we can apply the test that is it an amount from sale, supply, distribution of goods? Answer is no. Or on account of the services rendered, because I parked some money where I got the interest. Services rendered? Answer is again no. Or by both? Answer is again no. So it will not form part of my turnover. Of course, it will be in your P&L account, but as far as definition of turnover is concerned, it will not be. So you need not to worry about that particular part. And of course, one more important thing, that your turnover is only for the limited purpose. We are using the turnover definition just to check some of the criteria based provisions. So, and this net of taxes and the gross of taxes, which we generally face the difficulty, especially when you are on the border lines. So suppose you have a turnover of say net of taxes, you have a turnover of 245 crore, and after the taxes, and the gross amount of the tax of turnover is say 255 crore. Now 250 crore is the threshold for the secretarial audit, whether you will go for the secretarial audit or not. So this kind of difficulty we used to face in the earlier definition. So now there is a clarity that it's the gross amount, so 255 crore, and then you have to comply with the 250 crore triggering provisions, whatever is there. So absolute clarity in the definition as far as turnover is concerned. Now coming to the definition of net worth. Thankfully, this net worth definition was also amended in the same act in 2017. And earlier, this was a very vague definition with regard to the net worth. But again, the definition is very clear now that you need to have a paid up capital plus surplus in P&L plus reserves other than revaluation reserve plus securities premium account minus accumulated losses and minus your miscellaneous expenditure not written off. In the earlier definition, if you have the accumulated losses, you need to deduct, but if you have surplus in P&L, you are not allowed to add. That was a problem in the earlier definition, but now that problem is removed. Now here I have a very difficult scenario, and I don't know, it's practically very difficult to follow also, and I don't know how long it will be followed. That is also one of the challenge which we face while calculating the net worth, because it says that other than revaluation, right? So the companies which has adopted Ind AS for the first time, so there are sometimes they have to revalue everything, and some reserves are created because of that, right? So those reserves are carrying in my books, and of course it will be in my financial statement, in my balance sheet. It is reflecting as a reserves, revaluation reserve, and reserves. Simply it is written as a reserve, right? So I have to actually dig out that out of that reserve, how much belongs to means with for the revaluation, and which is without revaluation. So whatever the related to revaluation, I have to omit. I have to eliminate it. But how long it will be eliminated means because every year this balance will carry on. So we have to create a kind of a note in our own notebook and diary that how to handle this kind of situation. And secondly, sometime we find a figure like capital reserve. Now, capital reserve may be out of because of revaluation, and maybe without revaluation. So we should not simply add here. We should, go back to the history, that how it is created in our books. So if it is created because of revaluation, then you can omit it. You should omit it rather. And if it is not because of revaluation, you can add it. So depending upon the facts and circumstance of each case, you have to actually dig and deep dive. You have to go for the deep diving of that, finding out that information, and then only you can come to the conclusion. There is I cannot give you any guidance on that, unless the data is available with the history. If such kind of any such kind of things you see in your financial statement, just deep try to find out some more details and take a conscious view on that particular item. And this is also impacting some of the criteria based provision, like if you have 500 crore of net worth, the CSR becomes applicable. So such kind of things may trigger. Now, another problem with the net worth is the net worth which is given in DPT3. We will not discuss DPT3. Let me clarify that aspect. But what I am saying that a completely a different definition is given in DPT3 form, but a different definition is given in the Companies Act as such. So both the definition are not gelling with each other. And moreover, the DPT3 definition is actually I don't know why that definition is there at all. First of all, I don't have the clarity because it is nowhere linked to any figure actually. Because if you look at DPT3, it says that whatever the net worth is calculated for deposit taking companies, it says the form says that you can whatever the maximum you can accept 35% of the net worth. But actually the deposit rule says 35% of the paid up capital plus free reserves plus securities premium amount. It doesn't link to the net worth. So even I am not very clear why the net worth is continuing. Earlier act it was fine, but in the new act why it is continuing in the DPT3, and that to a completely different net worth what is prescribed in the Companies Act. So so you may face those kind of difficulties as far as DPT3 and this alignment of DPT3 and this net worth. Those practical challenges we are facing actually. So this is about the turnover in the net worth. Now coming to the shareholding pattern, now you have to give the number of shares in 10 different categories rows wise and Indian and foreign column wise of promoter and public. So you need to give the total number of promoter holding and the public shareholding, then the total number of shareholder public plus promoter and FI details, which is now omitted, of course. So this you need to give. Now a very interesting scenario which is there, that you need to give the details of, you need to give the number of promoters and members, other members other than promoter at the beginning, addition, cessation, and at the end of the year. Now, interestingly, if you look at the definition of promoter, right, definition of promoter, it talks about three things. Number one, if you have named somebody as promoter in your prospectus. Secondly, if you have named somebody as a promoter in your annual return. And third is, of course, that third is highly subjective control, the what we call it is related to actually the control. So third one is subjective, leave that apart. But the first two are very specific, that somebody's name is mentioned in the prospectus. He will, as promoter, he will become your promoter, and somebody who's named as a now the if you look at the definition, who's named as a promoter in your annual return, but you must have filed hundred or thousands of annual return. But have you ever seen that the entire annual return is talking about naming of somebody as the promoter? It talks about the number, it doesn't talk about the name. And the definition says if you have named somebody as promoter in your annual return, but we have never named anyone as a promoter, we are just giving the numbers. So there is a contradiction, right? We give the number, but the definition says the name. So so there is a complete contradiction as far as the annual return format is concerned, and vis-a-vis the definition which is given in the Act. Now my suggestion here, because the promoter is having some kind of responsibilities in the law. What are those responsibility? Suppose there is a case of resignation of directors, right? So what the law says that in case of resignation of directors, in case of resignation by all the directors of the company, all the directors, then the promoters, or in the absence of promoter, central government shall appoint new directors. So first right to appoint directors with promoters. Now who is your promoter who is named as promoter in annual return? Now who is named as a promoter in annual return? Nobody, because in annual return I have given the numbers, not the name. So there is a contradiction. So this is a problem. Now to overcome this kind of problem, I always suggest that we should create again a clarificatory kind of a letter that the numbers which I have given of say 2, 3, 5, 10, whatever numbers I have given, these are the people who are, these are the 10 people, if possible with some kind of identification, maybe PAN number or maybe some other identification number, say, so that would be great to, so it will complete the loop actually, rather the whatever the flaw which is there, it will complete, and this promoter will have a right to appoint the new director in case of everybody is resigned. So they have the right to appoint director in case of all the directors become disqualified, or all the directors have vacated the office, all the directors have resigned from the board. So these people get the right to appoint, first right to appoint the directors, and so this is the importance of, and unfortunately we do not have the mechanism of like DIR12 kind of a form in which we can report to the promoter that these are the promoter appointment or relinquishment of promoters and all those things. So that is unfortunately not there. So I always suggest to maintain a register of promoter actually by the companies. And not only that, also whenever there is a change in the promoter, I always suggest to record the same thing in the minutes also, in the meetings also, that up to from this and this onwards, these people have ceased to be the promoter, and these people have become the new promoters of the company. Even I'm talking about more from the unlisted company's perspective, because in listed company there is a proper mechanism is given, but for unlisted companies there is nothing is there. So we need to be very, very clear on this aspect, and specifically those companies which have subjected to the takeover during the year. So if you are working for say annual return of financial year 2021, and during that year the company was taken over by some other company or some other group, right? So you need to be very clear that during the year there is a change in the promoter and all those things. So that part is to be taken care of, right? So it should not be the copy paste exercise from the last year. You need to be very clear and on this particular aspect. And this naming aspect, if you can implement it, that would be very. I personally feel that it will complete the loop, complete the flaw, what is there in the form, right? So this is something about the promoters. Now question comes: can a company be a company? Can there be a company without promoter? Of course, yes. It is very well possible. We have a lot of examples available in real life scenario where the company doesn't have any identifiable promoters. That is very well possible. We have the companies like ITC, we have the companies like L&T, where you can very well see there is no identifiable promoters. We have whether the shareholding is always mandatory for becoming the promoter? The answer is again no. It is not necessary that the person should always be a shareholder or director of the company. There is a possibility. There are enough cases where the promoter can be without shareholding and without directorship also possible. So in fact, if you look at the law, the section which I referred sometime back, 167, which deals with the resignation of directors, what it says: in case of resignation by all the directors, promoter, or in their absence, central government shall appoint new director. In their absence means absence of promoter is possible. The law itself is giving us that scenario is very well possible. So these are some of the things which, with regard to the promoters, which we need to take care of. Now coming to the directors in KMP, so you need to give the board composition divided into executive director, non-executive promoter, non-promoter nominee. All it's completely depend upon what kind of filings you have done in past and what kind of structure you have in your companies. So it's completely depend on that to disclose the composition. Number of directors at the beginning, at the end, percentage held by those directors at the end of the year. Details as on the closure of the financial year. Then you have to give their name, PIN or PAN in case of KMPs, designation, number of equity shares they hold, date of cessation, and date of cessation after closure of the financial year. And changes during the year, name, DIN, PAN, designation, all those details are required to be given. Now here, there are two things where I found, in many cases, I found a contradiction. Suppose in point number 2, you are seeing one of the column that percentage of share held by the directors, right? where you give the data in numeric. You have to give the data that how many executive director you have, how many NED you have, and against that you need to give the percentage. And below that there is a table which says that you need to give the details as on the closure of financial year, who are all your directors. You need to give the name and the number of equity shares. Now in the above field you are giving the percentage, and below field you are giving the numbers. I found contradiction because sometimes people forgets to give the percentage above and give the numbers here, and sometimes they give the numbers there, but they don't give the any number here. So if you are disclosing any data anywhere, please make sure that there should not be any contradiction, because there is no check actually available in the form. So this error may happen where you forget to give the percentage, or the below you forget to give the numbers, or you so whatever the scenario, this is one of the point where the we found errors, more errors than anything else. And, then coming to the changes during the year, if at all it is there, then you need to give the data. Now one important another aspect for which I don't have the clear answer actually, but I go with the logic only, that in third number point, you are seeing the date of cessation after the closure of the year, after the closure of the financial year. So as on 31st of March, suppose I have a director, Mr. A, on my board. My AGM is on, say, 30th of September. But on 31st of August, Mr. A resigned from my company, right? So naturally, I have to give the details of date of cessation after the closure of the financial year. But to which extent, to which date I have to give this disclosure? Say up to the date of AGM or up to the date of filing. So suppose my AGM, my resignation of director was on 31st of August, but my AGM is on 30th of September, but my filing is on 29th of November. And from AGM to 29th of November, last date of the filing, suppose one more director resigned from the board, whether that director disclosure should come as a date of cessation after the closure of financial year or not. Now, you do whatever you do, whether you do it or whether you don't do it, form will accept it. But what is the logical answer to that? I always take a cutoff date as the AGM date, because this form is linked to the AGM, and the triggering of the filing is happened from the. Of course, you do it after the closure of the financial, after the AGM. Also, the form will not say anything to you. And moreover, suppose you have not done 2 years filing, assuming you found you onboarding a company in your client list which has not done the last 2 years filing. So will you do the filing? Will you from the last financial year for which you've done the filing till the date means today, all 20-30 directors, whatever changes have happened, whether you will disclose that? It seems absurd actually. So if the same year filing is happening, everything is online, you can still manage those kind of things. But if some past filing which are due, which you are doing right now, it will be very difficult if you take that kind of view. So I generally go by AGM, but of course no wrong in doing up to the date of filing also. That has choice available. Okay, coming to the general meetings disclosures, and the board meeting disclosure and the committee meetings disclosure. So in case of general meeting, I have only few of the points here which is debatable point, rather I would say. Rest all the data are very means nothing to discuss in that. Now the question is on the total numbers of the members entitled to attend the meeting. That is the disclosure which we can which we need to see that how we calculate total number of members. So suppose you have a company where say I am a shareholder of your company. I am holding shares in physical form, also maybe holding in demat form, or I may be holding shares in multiple demat accounts. Say I am holding shares in 3 different demat accounts of your companies. So my name in your shareholder database will be reflected 3 times, right? So while calculating total number of members, whether you will calculate me as 3 or you will calculate me as 1. Now, if you will say it is 3, so that means if say 27 members are already present in the AGM and I join the meeting, so if you will consider me as 3, so that means 28, 29, 30. Now quorum is there, and you can commence the meeting. So again, it looks very odd that we have actually 28 people, but we are saying quorum is present. So will you consider me as one, or will you be considering me as 3? So according to my answer, according to me, it should be considered as always 1, not as the 3. And you have to actually try to figure out this data, because see, you will get this data, you will get this feeding from the depositories through your RTAs, and or maybe if you are maintaining the data in-house, so whatever the feedings you are getting.
Sir, sorry to disturb you. I think that's why we are providing this shareholding pattern to stock exchange as a PAN-based details.
Right,
Instead
absolutely.
of
I was coming to that actually. Anyway, good you found out. You mentioned this particular aspect. Now, what I mean to say, these are the points which you should actually, while preparing the annual return, you should take care of. And what the point Mr. Sudesh has just mentioned about the shareholding pattern pen based, which is very important actually, because suppose one of the investigations, suppose CBI asks you to provide the top 10 shareholders of your company. If you'll consolidate my holding, then I may be in top 10, but if you will not consolidate my holding, I may be out of top 10. So you should always try to merge the shareholding so long as it is possible. That diligence you have to do, because in case of certification of annual return or even the signing, we say now we have taken care of all due care, diligence. So this is a part of your diligence actually, where you need to merge the data. And it is very well possible in case of unlisted companies also, where some of the old companies which are issued shares at multiple times and the multiple folios are allotted. Nowadays what has happened, majority of the things are linked through PAN. Specifically in case of demat accounts, it is very well linked with the PAN. But what about the physical shareholding, which is for the companies which has come with the IPO 20 years back, 30 years back? In fact, I worked for a company whose IPO came in the year of 1929. Now, can you imagine how during that point of time everything was completely physical? If somebody is writing my name as Anshul Jain or Anshul Kumar Jain or AK Jain, there is no mechanism to track whether it is the same person. So I got the shares in all 3 names with 3 different folios, but I am one. Now when I am linking, so I'm able to find out though it's a one person. So long as it is easily possible for you to match, then you cannot simply assume that Anshul Kumar Jain will be AK Jain. There should be some identification, something should be common. And that common address cannot be the common, because my father may be AK Jain and I am Anshul Kumar Jain. That is also possible. So I may be we two are the different individuals. So long as possible, you should do that kind of diligence, deciding the total number of the members attending, entitled to attend the meeting. Then second aspect come to the percentage of the total shareholding. Now, so long as you have only one equity class, there is no problem. You can very well consider total number of your denominator, will always be your total number of, your capital will be your denominator. That's not a problem. But wherever you have the preference capital, right? And those preference share capital, preference shareholders are having voting rights also. There your denominator will change. So remember the example which I've given, 100 equity and 200 preference. So there your denominator will become 300, and accordingly you have to calculate the percentage. Wherever you have only equity with voting rights and preference without voting right, no problem. Wherever you have equity and preference both as voting right, then you have to change your denominator also. That you should remember that. So these are the 2 important points as far as this disclosure is concerned. Now coming to the board meeting, that the number of board meetings held during the year, total number of director as on. So there's a tabular exercise which you need to do, and as per your attendance data and as per your minutes of board meetings, you need to create this table and disclose accordingly. And then the percentage and all those things are calculated automatically by the systems. Likewise, you have to give the data of your committees, right. Now, next disclosure is with regard to remuneration of directors. Very interesting in this particular disclosure. All are okay, means every disclosure we can make it. There is nothing which we can't make it here. my only point with regard to the sitting fee, whether sitting fee is a remuneration or not. So when I ask this question to in various programs, and also majority of the time I get the answer, no, it's not a remuneration, so no need to disclose. But when I ask people to read section 197 subsection 5, it says a director may receive remuneration. A director may receive remuneration by way of for attending the meeting of the board and committee thereof and all. So no doubt the section itself saying that sitting fee is a remuneration. So there is no doubt that whether we should disclose sitting fee as part of remuneration of directors or not. What the law says, that law says actually otherwise. It says that while calculating those percentage of 11%, 10, 5, 3 and 1, those percentage sitting fee should be eliminated, right? But as far as sitting fees per se is concerned, it's a remuneration. So what you should do always, in there is a column called others. So you need to give the disclosure. You should always make a disclosure as far as sitting fee is concerned in annual return. And again, in that clarificatory letter, you can provide the data of sitting fee, that out of that I've disclosed this much of the remuneration, and out of which this belongs to the sitting fee, because anyway I've disclosed in the other column. So what is that other? So I'm explaining, so that anybody who is looking at the annual return, he will be very clear that you are not violating the provisions of the law, or you're not crossing the limits and all those things. So but to say that it is not a remuneration, I don't agree with that, because section itself saying it's a remuneration. And moreover, we have a definition of remuneration also in Companies Act. So going by both the things, it has to be disclosed according to my understanding, right? Rest all data are very generic data, which is very well available with all the companies, which you can provide. However, while providing this data, also try to align your Ind AS disclosures, because in Ind AS, the director's remuneration, the KMP remuneration are disclosed as the related party transactions in as per Ind AS, right? So that data, whatever you are disclosing over there, whatever you are disclosing over here, what is the approval given by the board and the shareholder, all those should be aligned. Means, or if you are finding any kind of difference, then that difference should be explainable. Because of XYZ reason, I'm not including in Ind AS disclosure, but I'm including in Companies Act disclosures. Whatever you do, there is no harm in doing that, but it should be, you should have a proper notes that why the figures in Ind AS is 100 and why in Companies Act is 110, so all those should be very well explainable in your own notes, so that in case any in future you need to provide any kind of clarification to any potential acquirer, or maybe the regulator, or any other person, so you can very well explain those kind of scenarios. So that you need to make in your notes, but everything should be aligned.
Hello.
And it's a good
Hello.
exercise. Yes, please,
Hello?
Mr. Ravi. Yeah, tell me.
Yeah, in my case, my director's remuneration during the last year was, for example, 10 lakhs. Okay. And in the AGM, it has been 15 lakhs. So in annual return, what I shall mention? 10 lakhs or 15 lakhs?
No, so I'm sorry, there was some little bit of disturbance while you were giving the data. What has happened? 10 lakhs to 15 lakh, what exactly has happened? Sorry.
The remuneration has been increased from 10 lakhs to 15 lakhs during the AGM. Okay. This year.
So how much you paid actually? It is on the paid basis. Whatever you have paid during the financial year, that you should disclose actually.
But it is effective from 1st of April. The AGM was conducted now in the month of
Right.
July.
So how much you paid? Actually, how much you paid? Because the sitting fee and everything, every data is on the paid basis. Whatever you paid, that should come. So it is effective from 1st of April, but you have not paid. It is accrued. So that is the reason I said in your books of accounts it may be different figure, but in annual it may be different figure. But you should be able to explain those kind of things, right?
Right. Okay. Thank you.
Okay, now a very important point with regard to the certification of compliances and penalties, punishment. So Sandeep, can you be on mute, please? Sandeep Singh Chauhan, can you be on mute, please?
Sandeep ji, 1 second, sir. Yes.
Right.
1 second. Sandeep ji, please mute yourself.
Right.
Yes.
Now he's on mute. Now,
Yes.
Thank you, Sandeep ji. Okay. Now, a very important point actually, this particular point, a radio button, you know, in this form, there is a radio button, yes or no. This single radio button is actually created the scope of this document beyond imagination. So it says whether the company has made compliances and disclosure in respect of applicable provision of the Companies Act 2013 during the year. So it is actually not linked to the whatever disclosure you have done. It is open-ended. Whatever. So in annual return, we have not talked about RPT. We have not talked about loans to director. We have not talked about CSR. We have not talked about loans guarantee or securities. We have not talked about the various other provisions which are actually applicable to the company. But whether as an auditor or whether it is a person who, whether I'm signing or whether I'm certifying, whatever the case it is, as a practicing CS, whether I should verify all those aspects of the act or not. The answer is yes, because you have to click on this radio button. Yes. So just a small radio button, and the scope of this document is very large as far as my understanding is concerned. So this statement is very actually very dangerous statement which we make very easily, that yes, we have complied with all the provisions, and if no, then you have to give the reasons and the observations also in this annual return. So just a radio button and see the scope, it's too large, and you need to provide the details of penalties, punishment, as far as whatever the penalties and punishments are imposed, that is to be disclosed further. And compounding, of course, you have made any kind of compounding, that is also to be disclosed. These are some of the attachments which you need to compulsorily provide. And in my case, you must have noticed that a lot of clarificatory statement I have made in an annual return. So in by and large, in a general annual return, by and large in my annual return, you will find at least 6 to 7 different kind of clarification which I provide, so that the understanding gaps between the reader of that annual return, means the end user of that annual return, and the person who is making it, like me, the gap of understanding I try to always sort it out whenever somebody is seeing. He should not reach to me to get the clarification. He should be able to understand my disclosure then and there itself. That is the attempt which I always try to make as far as these clarificatory letters are concerned, right? Now,
Thank you so much, Anshul, for mentioning about these clarificatory letters, because many of the profession generally jumps this point and they do not look for the alternative option. So this is the very good alternative option you have given.
Right. Okay, thanks, Santosh. Now coming to the MGT8, this is a certification of annual return which we need to.
Sorry to interrupt. Coming back to the complete list of shareholders. So this list of shareholders shall be attached for of which date? That is for of the AGM date,
31st of March. No, 31st of March you need to provide. Right.
Yeah, okay.
Because in the one thing I have not covered in this entire presentation, though it was part of my presentation, the opening slides, which says that as at the end of the financial year, because I assume that there is no need to waste time on those section 92 barrack reading. So I didn't do that, but it is very well clarified over there itself. Anyway, now coming to the MGT8, this slide we have already seen that it is applicable to specific companies. So just for repetition, I'm saying that it is applicable to the listed companies and the companies having paid up share capital of 10 lakhs or 10 crore or more, or turnover of 50 crore or more. So those companies are additionally, in addition to MGT7, they have to go for this MGT8 also, which is to be obtained by practicing company secretary. So it's a certification of annual return. For the easy understanding, what I've done, this entire MGT8 is divided into, according to my own understanding, it is divided into 3 parts: part 1, part 2, and the third one is the qualification non-compliances. Part 1 talks about the verification of the correctness of the facts, then the compliance in general, then the verification of statutory register. Part 2 talk about those 18 different compliance status of those 18 different points. And if at all you have any kind of disclaimer, adverse remark, qualification or reservations, that also you need to give this MGT8 document. Now, what we'll do, we'll go one by one, each and every statement and paragraphs, and try to understand what exactly the with some of the very interesting things which are there in this annual return, which I'll try to explain. Now, the part 1 talks about declaration, that what has been done, right? So it says that the PCS means if we are talking about ourselves. So is there any question? No. Okay.
No.
So it says that the PCS means when we will write as a practicing company secretary, will say we have examined. So the PCS examined the registered records, books, papers for the financial year. And it says that, and this is the first statement, what has been done. So what I have done, I have examined. Then it says, on the basis of that examination, I am forming an opinion. What is my opinion? In the opinion, and to the best of my knowledge, and according to the information and examination carried out by me and explanation furnished to me by the company. Of course, all these are based on the records of the company, its officer, agent. Then I'm certifying. What I'm certifying? That the facts stated in annual return, that is MGT 7, are correct and adequate. So now you see the first statement of MGT 8. It says facts stated in MGT 8 are correct. So naturally, without having the copy of MGT 7 in my hand, right, I cannot release MGT 8. That is for sure, because the first statement I'm talking about the correctness of annual return, right? And interestingly, if you notice, this does not only talk about the correctness, it also talk about the adequacy. So it says that the facts stated in MGT 7 are correct and adequate. Now try to correlate my clarificatory letters with this particular word adequate, because it is very, very difficult to interpret what is the meaning of the word adequate. For me, something is adequate, right? Something for you may not be adequate, and for regulator definitely it will not be adequate, right? So I am, as a company secretary in a company, when I am preparing annual return, I am thinking it is correct and it is adequate, but for practicing company secretary or maybe for the regulator, they may say that it is not adequate. So this adequacy word, because correctness everybody can ensure, I can ensure, you can ensure, but adequacy, how to decide what is the adequacy. So at least whatever I am say for example, just go back to that sitting fee example. Sitting fee, non-disclosure of sitting fee may be correct to a limited extent. We can say it may be correct, but whether it is adequate. Now, the moment we talk about the test of adequacy, I don't think it can pass the test of adequacy. So it's always better to disclose, because you can pass the test of correctness, but you cannot pass the test of adequacy in that case. So that is also, so this word adequate is a very dangerous word, which I always consider in entire MGT 7 and 8 exercise. This adequate word I consider is the most dangerous word, because it's very subjective, very, very subjective. And we are at the mercy of the third parties, that how they are going to interpret this particular word. So try to disclose as much as possible. So at least we can justify that whatever is there we have disclosed. Now there is nothing more to disclose with me, so it is automatically it will pass the test of adequacy. Then it talk about the correctness of the declaration made in annual return. So it says including compliance of applicable provisions of the act and maintenance of registers. So nothing much in this to discuss. Then it talks about these 18 points, which will go one by one. So first it talks about its status under the act. Now, interestingly, what is the meaning of the word status? Can anybody tell me what is the meaning of the word status? Any answer for this word? Because we are certifying that the company is complying the its status under the act. So what is the meaning of the word status? It's a generic, it is a general word actually. There is no legality involved, there is no definition, nothing. So while certifying this, sorry,
Factual position
Might be
No.
the status of the company that is shown in the master data.
So I got one answer, say master data. So
No, so here it is not only status, it is status under the act. So it should be yes, please.
Right. So no, my point is that we have been certifying this annual return from last 6-7 years. So while certifying, when somebody is typing this statement that the company has complied with the provision of its status, what is the thought process in our mind? What is back of our mind when I'm certifying? What is the meaning of this word status? I know that this word is not defined in the law. It is not defined in the law. I am aware of that fact. But as a company secretary, I should have my own definition of the word status. And while engaging, at the engagement stage, such kind of point should be clarified with the client itself. That when I will certify the MGT8 and when I will talk about the status, I have this meaning, whatever the meaning you have. So at least you are limiting yourself. That otherwise it's an open-ended word. How to define the word status is very difficult, very, very difficult. And somebody mentioned about the master data. Now, even I feel that is not a, with due respect, I feel that is not a correct answer, because as a PCS, you made a statement in MGT7 that based on my examination of the books, papers, registers maintained by the company, I am forming this opinion. Now, whether the master data maintained by the company or it is maintained by the registrar. So you will, if you consider that the active inactive, that status, it means you are contradicting your own statement, because it is not based on based on the examination carried by you of the records of the company. It is records of that some third party, and based on that you are forming an opinion. So so you will contradict the statement. So what I have done actually, I know you may agree, you may disagree with my own definition of the word status, but when I talk about status to my PCS or we always have a understanding, and I always say that the word status means if I belong to a particular class of company, that is my own definition, right? If I belong to a particular class of company, then to remain in that class, Mr. Gaurav Mahajan, can you be on mute, please? Yeah, thank you. So my definition of the word status is that if you belong to a particular class of company, and to remain in that class, whatever minimum is required to be done is nothing but your status. So like Santosh has rightly pointed out, that it's not only the status under the act, so it has to be a very larger, definition. So say I am a private company. So what I have to do? Say for example, I'm a private company, right? And I'm supposed to make a contribution, 2% contribution to CSR, for CSR, right? I've not done that. So what I need to do, if it is not an ongoing project, I need to deposit it within 6 months in a fund or mentioned in schedule and all. So I have to do that. I have not done that also. Whether I lose my status as a private company? Answer is no. I will be private company only. The penal consequences will follow. That is a separate issue. But if you look at the definition of private company, means the private company means a company which has a minimum paid up share capital as by prescribed and by its articles A, B, C. One is talking about restriction, second is talking about limitation, and third is talking about prohibition. It says by its articles, right? So that means there has to be an article, and in that article, these three things should be there. If it is not there, can I claim myself as a private company? Answer is no, because it's a minimum that you have to remain in the private company as a private company. This is a minimum you have to do. So to remain, if you are talking about yourself as a listed company, but my securities are not listed anywhere. Am I a listed company? Answer is no. You can't be. To be a listed company, this is the minimum. I am a government company. This is the minimum, right? So that whatever the class of company you belong, whatever minimum is required to be in that class, I mean to say that the moment you not able to follow something, and then you will be out of that particular class. So you cannot claim yourself in that particular class. So it is nothing but your status. That is my definition. You may completely disagree with that, and you can have your own understanding with the word status. Then the second one is the maintenance of register records, making of entries therein within the time prescribed therefore. That of course nothing to discuss. The third one is again very interesting, very interesting, that the forms stated in annual return have been filed within prescribed time. Now stated means what? If you look at the word stated, it's a dictionary meaning. If you look at the dictionary meaning of the word, means on the face of it. But in the entire annual return, we have seen a lot of, so many disclosure, this, that, everything is there. But have you seen we are stating any form in the annual return? Right? Have we stated any form in the entire annual return? Answer is no. Where we have referred any form, where we have stated any form in the annual return. But the MGT 8 statement says that the form stated in annual return, but there is no form stated in annual return. So what to do with this particular statement? So this is another interesting scenario. So now go back to the history. On 1st of April 2014, when the company's management and administration rules came into effect originally, at that point of time, what has happened that a very big format of annual return was prescribed. So many people in this who was listening must have seen that. And during that time, we used to talk also that it's a so big format. If I'm not mistaken, there was a 36-page annual return was there in the notification copy, right, which was prescribed for the first time. It's a huge format. So in that format of annual return form MGT 7, which has never came as an electronic version, whatever version till last year we have seen, it was notified on the 5th of September 2015, and then thereafter the electronic version came of the new form. So that form actually was there only on the paper, and then it was revised in 2015, and we started filing under the new act in 2015 in the new whatever format we have you have been using since then, and now it is further modified this year. So if you look at that original format, and if my memory is right, the disclosure number 16 of that particular form, there was a table that during the year the following forms have been filed by the company: serial number, form, purpose, SRN also, and the purpose, and whether delayed filed, yes, no, if delayed filed, the reason of the delay, and that table you need to fill. Right now, keeping in that table in mind, now read this statement: forms stated in annual return have been filed within prescribed time. Now it is gelling completely. There is a disclosure in annual return, there is a form stated in annual return, and I am certifying as a practicing company secretary that whatever they have stated is completely reflecting over here, correctly reflecting over here. So this is actually, this particular statement is linking to that particular disclosure in the annual return. However, with the amendment in the annual return format, unfortunately, this statement was not amended by the ministry. So what has happened? I don't know who is doing this scribbling in the screen. Sorry for that. I am not doing it actually. So
But it has coincidentally covered the right part.
right. So so it is actually a very so what you can do. There are certain in law, it happens that because of some amendment in the law, some of the portion of the law become inoperative, but it is a part of the statute book, but it has become inoperative. So my knowledge says that it's a doctrine of eclipse. We must have read in the law that there is because of certain amendment in the law, some other provision become inoperative, but that other provision is still there in the legislation book. So it's an eclipse on those kind of provisions. So there is an eclipse. It says form stated in AR, but there is no form. Eclipse. I can't do anything with this statement. So you have two choices: either to modify this statement to remove the eclipse, or leave as it is. Or leave as it is, saying that there is no form stated in annual return. You have choices. Of course, I will never suggest to go with the second one. I will always suggest to go with the first one, to modify the statement that whatever forms were required to be filed by the company during the year have been filed within prescribed time or beyond the prescribed time, with or without the additional fee. So this kind of statement you can very well make, or some people give the table also of the forms filed during the year. So whatever the practice you want to follow, you can follow it. Now my only small point here, You may completely disagree with me on this particular point as well, but this is a view which I hold actually from very long time. Non-payment of additional fee because of the so-called extension circular, because nowadays we always get those kind of extension circulars where the 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 last date of the filing, so-called extension, I say that, whether that is considered as the filing within prescribed time. So this is the very interesting scenario, because we generally say, okay, we have filed that in within time. But actually, if you look at section 403 of the Companies Act, which talks about the payment of fee and levying of the additional fee, it does not give any power to the central government to extend the date of filing of any form. Right, in the entire Companies Act, I have not seen any power available with the ministry where they can extend the date of any form. What they can do only one thing. The choice is given to this Ministry of Corporate Affairs either to levy or not to levy the additional fee. Right. So technically, what is happening? You are not paying additional fee, but you are filing form beyond prescribed time. Because prescribed time is 60 days. In law, it is written 60 days from the date of AGM, means it's 60 days from the AGM. But those extension circular, if you look at very carefully, it says that the central government shall not levy the additional fee. It does not say we are extending the time. It says no, we will not levy the additional fee, because they don't have the power. Where is the power to extend the time of filing? So my understanding says that whenever such kind of scenarios are there where you are filing the annual return, say within the timeline of so-called extension, I'm using the word so-called extension just for our understanding. To my knowledge, it is not extension. So for those so-called extension within that time, if you are filing, so this statement should become like that form filed by the company beyond the prescribed times, but without additional fee. So it cannot be with or without. It cannot be with or be within the prescribed time. It is beyond the prescribed time, but without additional fee. So that kind of statement, that will be actually the correct position to my understanding. Okay, next point comes to the due processes or the compliance of the meeting of the board committee members as stated in AR have been complied with. Of course, this is what are the due processes, what are the compliances. Earlier, there was no due process. We were not having any due process for the board meetings and the committee meetings but fortunately now we have the secretarial standard, so we can consider that as a due process for the meeting and the compliances arising out of that. The closure of the register of members, compliance of 185 of the Companies Act, compliance of 188 of the Companies Act. So these are the sections actually, which is very generic statement we are giving that the company has complied with the provision of the section 188 of the Companies Act. But actually these statements are very big statements. You have to actually go back and check the entire compliances of these provisions. The fourth one is very interesting, that the compliance with respect to issue, allotment, transfer, transmission, buyback, redemption of preference shares or debenture, alteration or reduction of share capital, conversion of securities, and issue of security certificate. Now everything is covered in this. So now there are when we create the when we prepare MGT8, there are two kind of people, two kind of thinking thought process. One person is like that, he always work on the master document, right? So he has a version which is a master version, standard version available in his office. He always take the copy paste of that master version and make the amendments in that master version depending upon the finding of the audit and formation of the opinion. There is another person whose nature is that whatever the last document he worked upon, he just simply take the copy paste and make the modification. Now if you belong to the second category, right, if you belong to the second category where you take the cognizance of the last used version, then please prepare MGT8 always in a manner where you are not actually Miss Anju Jain, please. Yeah, now it is on mute. Thank you. So if you are belonging to the second person who is working on the last used document, right? So what you should always do, you should not delete anything out of MGT8. Whatever is not applicable, just strike it out. Otherwise, what will happen, the statement like this in a company where you are working, where the company has only issued and allotted the shares during the year, there was no transfer, transmission, buyback and redemption. So what statement you will make? Compliance with respect to the issue and allotment and issue of security certificate. That's it. Now next year, immediately next document where you will work, and if you relied upon the last document only, then your statement will be compliance with respect to issue allotment and issue of security certificate. But in that company, there is a case of, say, buyback, redemption of preference shares. So there may be a possibility. So always either use the master document and delete the statement, or if you are using the last used document, please have a format and try to strike it out rather than deleting it. So your statement will never, you will not miss any statement out of it. And you need to, sometime I found a few of the interesting things that companies issued the shares, right, during the year. As per financial statement, it is allotted also. But here we are writing only compliance with respect to issue of shares. But what about the allotment? Then if we have issued the shares, allotted also, then we must have issued the share certificate also. If at all company is not falling into the dematerialized mode, the compulsory demat mode, then where is that statement? So try to complete the entire, gap. There should not be any there is a possibility you have issued but not allotted. It is pending to be allotted as on 31st of March. But that you will be very clear on those particular points. Right. Next is compliance with regard to keeping in abeyance right to dividend, right to right shares, bonus shares, pending registration. Compliance with regard to IEPF, it's a big area to work upon. Then the compliance regarding the signing of financial statement, compliance regarding board composition changes, KMPs, disclosure and remuneration paid to them. So all this you need to comment upon. Compliance with regard to statutory auditor appointment, reappointment, casual vacancy, etc. So whatever it is there, you need to take care of that. Necessary approval from CGRD, tribunal, ROC and other authorities have been obtained. So this is the point. I remember one of the disciplinary proceedings of ICSI, because ICSI used to upload the orders of disciplinary committees on its website. So one of the order I have read a few years back, where the compliance certificate was issued by the practicing company secretary, and there was some charge, condonation of delay by the by the RD, and the statement was mentioned that there was no instances where the company was required to obtain the this kind of approval from central government or RDs and tribunal and all. So where the ICSI, where the complainant have filed the complaint that the statement is wrong, and the ICSI found that yes, the practicing company secretary is not acted diligently. So such kind of things you should be very, very clear if you are obtaining any kind of approval from central government, say name approval or something like that, regional director change, shifting of RO from one state to another, tribunal, mergers, acquisition, mergers, demergers, such kind of a thing. So whatever is happening, those events, whatever is happening, please also align this particular statement, because there is a possibility of error, because this statement is to be read with the other compliances. If nothing is there, of course you can very well say that nothing is applicable. But if at all you're doing some kind of charge satisfaction, condonation of delay, so you must have taken the RD approval, so that has to be come over there. Or in case of mergers, tribunal approval is there, so it has to come. So likewise, you need to take care of that. Compliance regarding acceptance, renewal and repayment of deposits, a big area to work upon. And this deposit, I always say that you need to be very, very vigilant as far as the entire deposit subject is concerned in your companies. Guide your companies, if you are working for a companies, guide your accountants who are maintaining the records, and if you are practicing CS, guide your clients on this particular area very carefully, because this compliance with regard to deposit provisions, it is actually very, very difficult. If something is non-compliant with regard to deposit, then it is very difficult to make that that entire non-compliant to make good. It's very, very difficult. So suppose you fail to file or forget to file some MGT 14 form, what you can do, you can immediately file it. Payment of additional fee, maybe you can go for the condonation of delay and something like that, or at least you have a choice. In case of deposits, because I have handled the companies which are accepting deposits and all. In fact, I was working for a company who is accepting deposits. So I observed that any miss in this particular area, it's very difficult to rectify. And it's a very serious subject where the government has a lot of focus actually. So so it's a process issue actually. If you correct your entire process in your organization for managing the deposit, then there will not be any problem. So so while certifying MGT 8 or while doing the secretarial audit, this particular area can be guided very well to the companies for correcting the entire processes. And this should be, if companies are following some kind of accounting softwares and all those things, so it should be linked with those compliances can be mapped to those softwares also. Compliance with regard to borrowing creation, modification, satisfaction of charge, then 186. Now this is very dangerous section actually in the entire Companies Act, because this is this particular section, if you look at, is directly dealing with the fund outflow of the company. If you are making loan, giving guarantee, providing securities, making acquisition of securities of a body corporate. So this particular section, entire section, is actually dealing with that particular area, and which is day in day out in any company. You will find none of the company will keep the fund ideal with it. Either it will pass it to the its subsidiaries as a financial support in terms of loan, or it will go to the for the acquisition of securities. So this section actually, according to me, in any company, day in day out it is used. And unfortunately, if you look at the penal provision of this section, it is with compulsory imprisonment. So there is no compounding available. And so the section which we are using directly or indirectly daily in our companies, that comes with compulsory imprisonment. So this is to be read and understood very, very clearly. Also, whatever the best means, whatever the I always say that always have a conservative approach while interpreting 186. Never make any aggressive interpretation because of the compulsory imprisonment. Moreover, this section has a very interesting scenario where wherever the possible errors, just I'll tell you. Of course, this particular area to discuss on 186 itself may take 2 hours time, but I'll just quickly tell what are the possible error areas. One is the reading of exemptions, because sometimes when we generally talk to the people that I'm a company giving the loan to my subsidiaries, whether 186 applicable to me or not. So general answer is no, it is not applicable. But section doesn't say so. Section says subsection 3 does not apply. It does not say rest all section does not apply. It says only subsection 3 doesn't apply. And so just a small example I've given. Now also as a employee company secretary, this section is one of the fantastic section to from the planning perspective. I'm fortunate enough to work a lot in this particular section and did a lot of planning for the acquisitions and all those things. But I found this section is a very interesting planning tool, and which gives a lot of comfort to the management. So just for an example, I have a limit available, say 60%, 100%, whatever the limits are there. I have a limit available, say 100, right? Out of that 100 is 80 is already utilized, right? 80 is already utilized. So how much I'm left with? 20. Now I have 2 proposals. My management came to me and asking me that we want to acquire we want to give a loan to a company, and which is our subsidiary, and also we want to acquire another company, right? So the management said 20 rupees we need to give as a loan and 20 rupees we need to make an investment. Now both the scenario 186 is triggering. Now which proposal you will execute first? Which proposal you will execute first? So we will say, okay, we will first make it to the subsidiary. Now the moment we make it to the subsidiary, now how much a limit I am having? How much limit I am having? 0, because for the purpose of making the loan, it says that it is not apply except subsection 3, because just because of board meeting only I can do that. It is not applicable, but for the purpose of limit calculation, it will come, right? So my limit is suddenly the moment I given the fund to my subsidiary, my limit was 100 and the utilized limit is again 100. So my limit has become 0. Now I want to give the money for the acquisition. Can I do it? Answer is no, because I don't have the limit. I have to go to shareholders. So should I go to my management and say, okay, sir, I want to go to the shareholder, 25 days notice, and or it's a compulsory postal ballot item. I have to go for the postal ballot. The management will say that this is nobody will like this kind of situation. Now reverse the scenario. I'll make first 20 rupees as an investment. My limit has become 0. Same. First I made the investment. My limit has become 0. Now I am giving the loan to my subsidiary. Can I give it? Answer is yes, because I need not to go to the shareholders. I will immediately hold a board meeting. In that board meeting, I will take a unanimous resolutions for giving of loan to my subsidiary beyond the limit of 186, because it is permitted without shareholder approval. So in this scenario, what will happen? I will execute both the proposals. So planning perspective is very important in and very, very complex scenarios we have handled as far as 186 is concerned. Very interesting section to understand and the read and all. Moreover, from audit perspective also, I'm telling all these things. You need to see the chronology of the events and then try to find out plus minus limits and everything. Another scenario in this section is with regard to subsection 1. What the subsection 1 of this section says that no company shall make an investment through not more than 2 layers of investment companies. See, subsection 1 of 186 does not talk about subsidiary. It says that not more than 2 layers of investment companies. So if you are a company, say A Limited is investing in B is investing in C is investing D. Now B and D is investing in E. Now B and D, suppose, are investment companies, irrespective of the fact that whether it is subsidiary or not. It's simply saying that A is giving money to B and B is giving to C is giving to D and D is giving to E. Now this is a chain, and in this B, C, D, E are not your subsidiaries at all, right? You're just giving the money, but they are not your subsidiaries, or you're making investment. These are not your subsidiaries. You may make 10% investment, you may make 5% investment, right? And in this entire chain, suppose B, C, and D are investment companies. Now, who has violated the law? The moment the money is gone from D to E, who has violated the law? A has violated the law, because A has made the investment through more than 2 layers of investment companies. Now, what is investment companies? The explanation is there. Explanation prior to 2017 amendment was very easy if you are in the business of investment. But after 2017 amendment, it has become very dangerous, very, very dangerous. What it says that if your if your more than 50% of your assets are of 50% of your total asset, more than 50% of your total assets are from investment activities, or not and, right? In NBFC criteria, it is written as and, but in Companies Act explanation, it is written as or if your total more than 50% of your total income is arising out of investment activities, then you are deemed to be an investment company. So you are a manufacturer of cars, but your total asset is say 100. Out of that 100, 55 is you made the investment in B. Then you are the deemed investment company under the section 186. So you have to ensure that the compliance of subsection 1. And not only you, even the company above you who has given you the money, actually that company will be responsible for the non-compliance. So whenever you are giving the funds to any company, right? Whenever you're giving the funds to any company, you have to monitor that fund, that where that fund is going, because the moment in between two companies have become investment companies, you've gone actually. So you violated 186 and it is a non-compoundable offense. That is a very dangerous scenario as far as subsection 1 is concerned. So that also you need to check as far as your audit point is concerned, compliance of subsection 1 with regard to investment companies or deemed investment companies, right? So this is very and this layering is nothing to do with the layering of subsidiaries, right? That is there because the layering of subsidiaries and layering of investment companies both are different as far as Companies Act is concerned.
Anshul,
Right, so this is
Shivangi.
Yeah, please tell me.
Sir, this about the investment companies, whether they are investment companies or not, we have to consider it as on date of investment and or as on the date of the last year. My answer is as on the date of investment. But how it is practically
Right.
going to see that whether we are investment
Right.
or we
So
are not?
right, that is where the problem is actually. So that is where the problem is, and that is the reason I am talking so much about 186. That you have to be very, very diligent about all this, and whenever you are giving the money, in fact, I'm telling you, I've drafted a clause also in my all the loan agreements and the shareholders agreements and everywhere, where I am investing or wherever I am having a making a loan to any of the party, any of the company. I make a make a point in my all agreements that at no point of time you will become investment company, or if you will become the investment company, immediately my loan will become repayable to back to me. So that and of course indemnity clause and all those clauses are there in my agreement. So what will happen by doing this, at least to a small extent, I am protecting myself. At
Okay.
least right. So this is also there. I think Jyoti Rao has raised the hand. Jyoti, please
Yeah,
tell me.
sir. Yeah, sir. In that case, is it required to take approval from RBI that as in that income is?
No, not really, because you are not become the NBFC, because NBFC says and, right, not or. So in NBFC you need to comply with both you need to satisfy both the condition together. But as far as Companies Act condition, it's much more stringent. So even you are purely a manufacturing company, but you can become investment company just by if you are receiving dividend, you are more than 50% income is from dividend or interest or whatever. So it gives a very difficult scenario, very difficult scenario to handle. And that too, interestingly, what I told you, that which company is in default, not the company which has given the money, which has passing the money through that layer, the company who's originated it. So they're the problem. So you may not be knowing only that this has happened. So you have to be very, very vigilant about all your investment. You need to monitor it on month basis. You need to take confirmations, declarations for all your investment, for all your loans. This is a process actually which you have to set in your organizations. That's the only thing, only way you can handle it. Otherwise, it's a very, very challenging scenario practically to handle. Right.
Thank you, sir.
So this is right. And then next, with regard to the compliance regarding alteration of memorandum articles,
Sir, 1 minute.
non-compliant. Yeah,
Shivang. Sir, but I got you are on the planning front, but the question is, if the management asks you that ye investments karne hai, and again that company invest in some another company, but you will consider whether the company is investment company or not as on the date of investment or as on the last date of the financial year.
So I'll consider as on the date of the investment only. I have to consider that the date of the investment only. Regarding, see, what is the problem, Shivang? What will happen in this case? You need to, as I am saying, you need to be very vigilant and monitor. Now, suppose you have not monitored it, and by 31st of March has gone and your financial statement are prepared. So it will be very apparently it will happen, right? So you have to plan that thing very well in advance only. So that you are out of, and then I said one thing very clearly, then don't take chance in 186 because it's a non-compoundable section. The problem is 186 is the biggest problem is 186 is a non-compoundable. It's directly go to the special courts for a trial. This is the biggest issue with this section. It is, had it been the case that it is coming with the or imprisonment, okay, no problem, we can go to the NCLT and rectify our default. Or compound our default. Had it been written as the penalty, no problem. We can ask the registrar of companies to adjudicate the penalty as per the adjudication of penalty rules, no problem. But what about the compulsory imprisonment? How to deal with that situation? As a company secretary, I say that this is the section which an employee company secretary day in, day out, he is using indirectly or directly. He may not be knowing only, but he is using it, right?
Okay.
And this is the section which is coming with compulsory imprisonment. So this has to be interpreted very, very conservatively. That is what my view is, right? So I leave it to you whether how to you want to handle it. But my point is that it has to be handled on a very conservative note because of the compulsory imprisonment. I don't want to make that scenario to happen. That's for sure. And not only for company secretary, it's also for my KMPs and my managing director, or if there are no managing director and KMPs, then my all other directors. It will be very, very embarrassing situation actually. So if your management is asking about, making, say there is a scenario, there may be a scenarios that where you may get such kind of situation that management asks you to execute the proposal because they are getting good deal or they want to make the investment as fast as possible. So there are other ways of handling it, not necessarily, of course this is not a subject of this presentation, but since you asked, I'm with the permission of Santosh, I can answer it. So you need to analyze that wherever you have made the loans, you need to call back that money. So the moment you will calling back the money, your limit will get open, right? Or if you are a private company or any such company where you can call the short-term meeting notice, that is again possible. If you can't call it, then you have to think that suppose 50 rupees I have given to my two of the subsidiaries, whether two of the subsidiaries are in a position to return back that money. If answer is yes, just take back the money. The moment you will take on back the money, your limit is again open, right? Or third thing, which I'll tell you, monitor 186 limit on day in day out basis in your organization. So with that, what will happen, the moment you will reach to 50%, 60%, immediately flag this issue to your accountant that you have already reached to 50%, 60% of the limit. Do you foresee any kind of investment? If answer is yes, tell me right now. I can immediately call the meeting or immediately initiate the postal ballot if it is company compulsory postal ballot company. So then I can do that process. So as a company secretary also, you have to be diligent. You cannot wait that 90%, 95% limit is already exhausted and the management is coming and saying, because management people doesn't know that you have this kind of problems. You can, and as a proactive company secretary, I have a session on this proactive and reactive company secretaries. So don't be reactive company secretaries, be a proactive company secretaries. So monitor the limit. The moment you reach 60%, increase the limit. You will never face this kind of problem, right? Okay, thanks.
Anshul, just to mention,
Sir, I have a question here.
1 second, Anshul, just to mention that they have already covered at least 2 hours. They have already taken 2 hours.
Right. So I know that this is the last slide actually, which I am going to cover. So, and in fact, the last statement only, then any kind of non-compliances, observation or qualification, adverse remark, you can mention it. Now, as far as annual return per se is concerned,
there is a last question from my side.
No, just wait. Just give me 2 minutes.
Just let the session complete, sir. Then after we can take the questions.
Right. So what I'll show you, this entire presentation as far as MGT 7 and 8 is concerned, it's all about MGT 7 and 8. Now in this presentation, I'll share the copy to everyone. Means I'll share to Santosh and to whomsoever I know. I'll definitely share it. I'll post it on few groups, so I think it will reach automatically to everyone, and also host it on the LinkedIn, so you can get it. But this presentation is also talking about the risk of the wrong certification. This also talk about the non-compliances, possible non-compliances of the Company Secretaries Act, because this is one of the area which we always ignore, that while certifying, what are the risks we are carrying as far as professional misconduct is concerned. So those are also covered. Then certification process, the entire certification process, how the certification process should work, how the master checklist should be created. These are the sample checklists. Certification process, again, how to maintain the records, working papers, third-party reports and management representation, content of the record file, that how the record file should be maintained and what all should be the content. And so this is all about this entire presentation. So this I'll share, you can go through it. And in case of any doubt and queries, you can very well reach to me. I'm happy to address those kind of queries. Right. Thank you, Santosh, for giving me the opportunity to address to the audience. And I'm happy to note that the at least 10-20 questions which have come in between. So it was an interactive also. So that's very nice to all the audience.
We have certain queries in the chat box.
We'll solve that also. I think Mr. Anand was having some query. He was talking and between we stopped him.
So may I, sir?
Yes, sir. Please.
Yes. Sir, you were just telling that in your investment covenants, you ensure that the receiving or investing company shall inform you about the possible, non-breaching of 186 provisions. Correct?
Right.
And
So,
in the-
it is written in two ways. Number one, whenever you are making further investment or giving a loan or guarantee or security, you will intimate me in advance so that I'll check whether you are possible investment company or not. Or second, you first of all you will reference yourself for doing that. But if you are in any way, like I am doing the business, they are also doing the business, they have to do it. So so they will intimate me first. So we will first analyze the entire scenario, whether are we violating 186, because I am responsible, because the money is initiated from me. I am responsible for 186 compliant. Because of your investment, I may be on the wrong side. So I have a right to monitor that.
Right. No, my question is something different. See, this is about the intimation of the investing company to you about, what is the current status of the investment. But my question is, let us say they invest, they intimate you, and you have included a covenant which says that in the event of breaching that particular provision, so the investment shall be recalled. Correct? So, is it as simple as that? Is it possible that you will be able to recall that investment?
No, it is not so simple. It is just giving me, that's what I said. To a small extent, I use the word to a small extent, I can save myself. But actually, typically, if you look at the legal provision, it's not a proper recourse.
Sir, if you remember, can you or recall your paragraph? So, would you like to share that with us? What exactly?
I'll do that. I'll do that.
Or if you recall right now, if you can tell us what is the paragraph, how you frame that.
No, so it's drafted in a typical legal language. Of course, I can share that paragraph. That's not a problem. I'll share it separately. That's not a problem.
And Dhanrajji and Jyoti Rao-ji, thank you, Anandji. Dhanrajji and Jyoti Rao-ji, sorry, Dhanraj and Jyoti Rao, they are raising hand.
Yeah.
Dhanrajji, I would request you to please unmute yourself and ask the question.
Yeah, my query is related to annual return only and not a technical one. In annual return, in form MGT 7, we give the details of director at the end of the year. Say for example, a director resigned during the year. So his or her detail we are not giving. Even the attendance record is not coming. So what about the remuneration of that person who has left the company during the year? So how a stakeholder will come to know that that person has attended, or attendance wise, whether he has complied the provision or not? What about his remuneration? Should we disclose, though we are not disclosing his name in number of directors at the end of the year, etc.?
Right. So that's a good question actually. So again, it is as I said earlier also, that if there are differences in your financial statement, in your minutes and all those things, so you should be having the clear answer available with you. So you, in your notes, when you are certifying the document, in your notes you should mention all these possible mismatches and that why it is happening, so that in future, if at all you want to explain to, you need to explain to someone, so you will be able to do that, number one. Or number two, the another scenario, which of course government is not asking anywhere, but to be more on a governance side, if you want to disclose it in a clarificatory kind of a letter, you can very well disclose that.
Actually, this amendment was expected in this form itself. The people who have left during the year, we are not giving details of them. And
sorry to interrupt you in between, but there is a possibility also that this form is still under, we have not started using it, or we will be testing it. And so there is a possibility, because I have not practically, honestly admitting that I have not worked on the new form by filling it actually. So there is a possibility that while doing this exercise, we may come across some kind of more challenges, or maybe some kind of new things may come up. So let's see. Of course, this point can be raised to the ministry. It's not a big deal.
Second and last point is, as in your first slide you mentioned the type of company for particularly unlisted I mean the private company which is a subsidiary of a
The
public
subsidiary
company.
of public
So we
company.
should
Right,
select
right.
the public company. But it depends
I
on the. Yeah, tell me.
right. Please carry on. No, please carry on. Sorry.
So in that case, it depends on the company. Actually, if the company is having only 2 directors and 2 shareholders, then they cannot select public, whether it is a subsidiary of a public or purely private. They have to go by that private status only. That's what I'm saying. So it depends on the company to company to select the type of the company.
No, but
But
Dhanraj Anshul ji has rightly mentioned to attach the clarificatory letter in that regard.
so I said whether you select public or whether you select private. In both the scenario, you please attach a clarificatory letter, which I said. And secondly, please check that part also. If you are saying that again, it will start a Pandora box and a lot of debate and all those things. But so I don't want to go into that debate. But I'm sharing just my view. If you are a company which is a subsidiary of a public company, if you are a private company, subsidiary of a public company, and is still working with 2 directors, 2 members, then just be very careful while selecting that radio button as yes, whether the company has complied with all the provision of Companies Act. Be very careful with that.
And also, in the companies where MGT 8 is applicable, I think the clarificatory letter requirements also is not required there, because with regard to the status
Mention
of
in
the
MGT 8 only.
company, status of the company under the act, that can be mentioned there only.
Right. So
Fine. Thank you so
MGT8 is not applicable for all the companies. MGT8
For
is
the
not
companies,
applicable for all the
yes,
companies. So
yes,
therefore, that may not be right documents. I think MGT7 clarification is good enough. Yeah, Jyoti, you were having some question, please. What's done? Okay.
Apologies, sir. By mistake, it was raised. No
No
question.
problem.
Anshul, sir, I'm having one question, sir.
Yeah, Shivank, please.
Sir, while you in the webinar you stated that the remuneration, the sitting fees has to be considered as remuneration paid to independent director. But if we see the definition of remuneration in the Companies Act, it refers to Income Tax Act. What it indirectly refers to Income Tax Act, that whatever perquisite received. If we see the definition of Income Tax Act, it says that it is a part of your salary. So if an independent director is getting a salary, then indirectly it will be considered as that he is an employee of the organization.
Okay. So
sir, just a minute. I'm not completed.
Right.
Just a minute. Just a minute. Sir. So this was first thing, first fact or first observation. My second observation is definition 2 of Companies Act starts with unless the context otherwise provide. So correct. If we read the section 197, it states about the key managerial personnel's remuneration. So I think the draftman of section for the section 197 subsection 5 has mixed the word remuneration for the key KMPs also and for the other persons also. Like sitting fees, he has considered remuneration for KMPs, but I think he should have not considered sitting fees as remuneration to be counted in KMP other than KMPs like independent director.
But Shivang, I'm not sure what the provision you're referring about 197 KMP, because I don't see any word used like KMP in 197.5. So that I'm not aware of whatever provision you are referring, because to
sir 197 sir 197 the heading says that overall maximum managerial remuneration and managerial remuneration in case of absence of inadequacy of profit. So correct. It's the heading says about the managerial remuneration.
So don't go by the heading. You read the entire section actually, and the word managerial, wherever the word managerial use, it does not say key managerial personnel. Key correct, managerial sir. Personnel is different, and the managerial personnel is different. It is a very well settled position. There is nothing to discuss in that. Number one. Number two. Why the word managerial is used in that, why not the director is used in that? Because of the manager, because 197 also talk about the remuneration paid to the manager. Third thing, 197.5 does not use the word key managerial personnel, it simply use the word director. Or fourth thing, it says remuneration by way of fee for attending the meeting. So sitting fee becomes remuneration. And fifth thing, which you very well clarified yourself only, that the remuneration definition has to be read in the context, which is the definition start with the definition section 2.1. It start with unless the context otherwise requires remuneration needs. So so all the answers are, I think, available.
Okay, sir.
Right? Yeah, Shailendra-ji, you want to ask something?
Shailendra ji?
Yes, sir.
Yes.
Good afternoon, sir. So, sir, my query is regarding to, to know some right manner of the, do the compliances in case the Indian company change their name and they having a shareholder who are the foreign shareholder and they are the body corporate.
Oh, sorry, can you sorry, Shailendra, can you repeat? I could not hear properly.
Okay. So my query is that there is an Indian company who changed their name and they having the two shareholder who are the body corporate from foreign land, and that foreign shareholder also changed their name. So what should be the right manner to do the compliances in register of members and other things?
So as far as a company, you look yourself only as a company, you will get definitely the intimation from your shareholders, right? So I'll tell you one. I'll give you a different example just for understanding purpose, right? You because I am an RTA, so I know I am an RTA, so I know very well this kind of this thing. Now let us understand in a different manner.
Right.
Suppose there is a company A Limited. It's a listed entity, right?
Right, sir.
One of the shareholder of your company is passed away in the year of 2017.
Right, sir.
Right? And the legal heir or the nominee, as the case may be, has given you the intimation of his death in 2021. Now, which year or at what point of time you will update your register?
So today, when we got the intimation.
Why not 2017?
Because we cannot go back to past.
Exactly.
So we will update our register when we get the intimation.
Exactly. So similarly, the shareholder, your foreign company, has to give you the intimation, right? That my name is changed. My name is changed from this to this. My name has become, and they have to give a documentary evidence to this, right? Like in our company, in our country, we used to get this certificate of change of name, right? So similarly, they will give some kind of evidence, documentary evidence, which is to be apostolized, and all those things are to be done, and everything. It will come to you, and based on that, you will update your register of member. Sure. If you will not receive any intimation, it will continue in the old name only, like the disease case I have given the example.
So, sir, you were trying to say till the time company not giving me a proper intimation for their name change. So I would consider their names are remain same, even though I know that the name of the company has been changed because that company has not taken any action from their part to him, right?
I as a company, I cannot act on it. See, unless I'll get the intimation, whether you know it or you don't know, separate thing.
Yes.
But unless I'll receive as a, so that is the reason I started my first statement to answer your question. You have to
yes. Right.
You cannot see as in a group company environment also, there are 50, 60 or maybe 200, 300 group companies are there where the mergers are happening and name change are happening and all those things. So you have to actually legally exchange the letter with each other.
Right.
In a group, if I am a person as a company secretary handling A Limited also, B Limited also. Now I know B Limited name has become C Limited, right? And A Limited is in records of B Limited, A Limited is, so I'll simply not change the, name in my book. Actually, B Limited, I will myself prepare the letter on behalf of A Limited, and I'll myself will hand over to A Limited, me on behalf of A Limited, and then only.
I'm fully no, sir. I am fully agreed with your point. My point was that even though I know that my foreign shareholders changed their name, they have not properly intimated me and requested me as to change their name. So till the time I will not take any action unless until I have a proper document with me. Thank you, sir. Thank you so much.
Right. Thanks.
Sagarji, can we take the questions in the chat box now?
Yeah. So I'll read it one by one.
Yes.
Whether net worth includes capital subsidy ?
Unless I know the exact nature, but just a simple meaning, if I'll go with the simple meaning of this word capital subsidy, I don't think it will be the part of net worth, but I need to understand the nature, how it is coming, falling in your books.
Next question is whether net worth what is the meaning of term inadequate profit? When company has net profit of 10 lakh and want to pay more than 11% to all director, that's called inadequate. Or when company wants to pay 12 lakh.
It covers both the scenarios. Number one, if your total profit is say 10 lakh rupees and you want to pay 12 lakhs, right? So your profits are inadequate to take care of your managerial remuneration. That is also the case. And the second case is also there where you have the limit fixed, say 11%, your limit is fixed by the shareholder. And that limit, though you have the profit, but that limit is not, you're not able to absorb. So that is also considered as your inadequate profit. So both the scenario comes in that.
Okay. There are few companies which have not yet obtained Eisen.
Mr. PC Agarwal also given the answer. I think he has also given the same answer, right?
Yeah. There are few companies which have not yet obtained Eisen and their shares are not in DMAT. How such companies could fill in the data in the revised MGT7, which is being notified. As a result, such companies may not be able to file MGT7 till the time its shares are in DMAT. Please offer your comments on such situation.
No, again, I think the new format never asks you the ISIN. It simply asks the shares in physical and DMAT. See, Rule 9A of prospectus and allotment rules has of course mandated that whenever you will come with the new issue and all those things, you will have to come with in the DMAT mode, and you need to provide the facility of dematerialization, and all those things are there, and then coupled with the PAS 6 form also. But it does not ask, the MGT7 doesn't ask about the ISIN data. It simply asks how much is physical, how much is DMAT. But so long as your company is not falling under Rule 9A exemption, I'll always suggest to go for the obtaining of the ISIN, because one of the provision in that Rule 9A says that the company shall facilitate the dematerialization of securities, and the intimation thereof has to be given to all the shareholders. This is also the compliance. So whether you are going for DMAT or not, you want to keep your securities in physical, that's absolutely fine, but you have to facilitate the dematerialization. But unfortunately, many companies have forgotten reading that particular compliance part where it is written you have to facilitate. So facilitation has to be there. But as far as MGT7 per se is concerned, I don't think it is asking for ISIN. And it will should not.
Can I interrupt here?
Yeah,
actually, in MGT7, there is a column asking for ISIN number. It is asking. Now, in new format, it is there, but I guess it is not mandatory.
No,
in MGT7, yeah, there is ISIN column. I have seen that, but I think it is not mandatory, so you can go ahead for filing.
Right, because ISIN cannot be made mandatory. Also, the reason, the logical reason is the exemption given in Rule 9A. There are 3 types of companies. The exemptions are already given, like government companies, the Nidhi companies, and the wholly owned subsidiaries. So even I am a company, but wholly owned subsidiary of my holding company, then I'm not supposed to follow the Rule 9A. I'm completely out of Rule 9A. So, so that cannot be made mandatory. That is for sure. And thanks for intimating me. I missed to see that ISIN part if it is there. So thanks to bringing it out in my knowledge as well.
Thank you.
Right. Any idea how many companies have been penalized to pay the penalty amount on non-filing of the annual return? Except
I think this is not
this question
subject
is
matter.
Yeah.
I don't know.
If a private company changes its name, I think this question has already been taken.
Yeah.
The next question which comes to is if Mr. A appointed as MD in October 2020 and not attended any meeting till today, Now said MD is asking details of board meetings, etc. from rest directors. Can you please share some guidance? How can we treat how can we treat the said situation? Can MD put condition that unless he or his authorized representative must be present in board meeting, whether MD can delegate his power to someone else to attend board meeting?
So this answer, if somebody will, whomsoever is has asked this particular question, CS Ruchika, I think she
CS
asked.
Ruchika, yeah.
I'll advise to read the Secretarial Standard 2. This scenario is very well covered in Secretarial Standard 2. And then if I'm not wrong, in guidance note of that Secretarial Standard, the similar kind of illustrations are also given. So you will get the answer that irrespective of non-attendance of the meeting, if the directors is asking for the proceedings of the meeting, that is the minutes books and all those things, it has to be provided. There is no doubt on that. For the tenure, it has to be provided. Secondly, the director must be having the agenda papers of all the meetings in which you must have given the minutes of the previous meeting for noting. Third thing, as per secretarial standard, the minutes are required to be circulated within 15 days time. Then within the next 7 days, you will get the time for the comments. It has to go to all the directors irrespective of their attendance. And if there is no comment is received or comments are received, or all whatever is, it is a chairman prerogative to consider it. And within 30 days, it is to be entered in the minutes book. And the certified copy of the minutes is to be again circulated to the all the board members. So he must be having it. But nevertheless, in spite of all this, if he is asking then we have to provide it. It is very well written in the Secretarial Standard.
All right. Whether sitting fees to independent director will be included in his remuneration of 1% limit?
So long as if you're for the purpose of calculation of limit is concerned, no. But as far as disclosure is concerned, yes.
Since there was a great discussion over 186, some of the participants are requesting to have a separate session on 186.
Oh my
Yes, Sagar, I have duly answered that we will be organizing that program very soon.
Yeah.
Right.
Yes,
I'll be
Anshulji,
happy.
I will be pitching you. Yes.
No, I'll be happy to address that, and thanks for that. And Santosh, I think now we can conclude.
I think there is no more question. There is one question from the side of Ruchika which I have answered. That Ruchika was asking, just for the knowledge of participant, that can you please share light on where to file compounding application for non-conducting AGM, ROC, RD or NCLT? So I have answered that 441 says you have to file application to ROC. ROC has to decide where it will go, RD or NCLT.
Whether it will go based on the amount of fine involved.
Yes.
If it is more than 25 lakh, then it will go to NCLT. If it is less than 25 lakh, it will go to RD, right? So it's depend upon the case to case, right? Anyway.
So one Anshul sir, you can just a small question. This compounding is only for section 96 because it is very, very, very confusing.
I know that I have also faced the similar kind of issues and where did a lot of research and all those things. I think section 99 is the key section for that. And according to my knowledge, the compounding is to be done only for 90s and under section 99, even not for 96, because 96 default is the fine prescribed in 99. So you need to go for the compounding under section 99, read with 96 only, according to my knowledge.
Thank you so much, sir.
Okay.
Yes, I think there is no more question now. And Sagarji, please confirm there is no more question, right?
Is compounded also for section 129?
I don't think so. I don't think so.
Yes.
That was the last question we had.
Correct. Thank you so much, Anshul sir, for sparing your time. We have already taken a lot of time. It's almost 2.5 hours.
No,
but it is
my
always
pleasure,
a bliss. It is always a bliss to listen to you. Thank you.
Oh, thanks a lot. Thanks a lot.
Sagar, I would request you to kindly give the formal vote of thanks.
Thank you so much, Anshulji.
Yeah.
My
Thank you so
pleasure.
much. Yeah, Anshul sir, thank you so much for coming today and gracing this with your presence. The way you conducted the session and the way you highlighted all the points and also gave the solutions, to the problems that you faced out of your experience. It was amazing. So just wanted to say huge bunch of thank you from all the participants and from my side and from Santosh's side as well. We really acknowledge your efforts. Thank you so much for the session. And
My
as a
pleasure.
part, if I may ask Santosh, just to unmute everyone so that they can leave and by saying thank you, so that will
Yes,
be a
yes.
wonderful
Everyone can
appreciation.
unmute themselves. One second. I just know. Everyone can unmute themselves and say whatever they
Thank you,
want to
sir.
say.
Thank you,
Yes.
Anshul
Thank
sir.
you so much, all.
Thank you, Anshul.
And I would just like to, like Atul Mehta sir is not, right now not present, but I would like to acknowledge the presence. He has joined the session, sir. Right.
Thank you, sir.
Thank you, sir. Thank you so much.
Thank you, sir.
Thanks, Santosh. Thanks,
Okay,
Sagar.
okay, Anshu sir. We can sign off now.
Bye-bye.
Thank you.
Yeah,
Okay.
all right,
Thank
bye.
you.
Thanks everyone.